Creamer Media's Mining Weekly is interviewing Deshnee Naidoo, the CEO of Vedanta Resources. The mining company with a diversified portfolio spanning critical minerals, energy transition metals, oil and gas, and advanced technologies. In this interview, Vedanta will share how it is accelerating the global energy transition while deepening its commitment to South Africa's mining landscape. Hi Deshnee, great to be able to chat to you. Vedanta is positioning itself as a leader in critical minerals. In this regard, how does Black Mountain Gamsberg zinc business in South Africa fit into the global battery metals and energy transition story?
So as a Vedanta today, we produce some 15 different commodities, split in areas of transition metals, as you said, aluminium, zinc, nickel, etc. And we also mine critical minerals. So that will also include our nickel, our copper, our cobalt. In addition to that, we are in energy. So today we produce almost 20% of India's oil and gas needs. We're also in the power business and in the renewables power business. And we also have a technology vertical that actually specializes in things like digital solutions, in cable technology, and also in recyclable metal. So that's the Vedanta portfolio. Now, zinc, as we know it, Martin, is incredibly important for energy transition because of a lot of our zinc goes in protecting infrastructure that will be used in things like renewable infrastructure. But as you also know, that zinc is being used quite innovatively now to look at battery solutions, be it in your zinc ion batteries or your zinc air batteries. So when you ask how is Vedanta looking at this, not only are we in the right commodity mix today, where I think more than 70% of our revenue actually comes from these transition metals, these critical materials, but Martin, a big part of this for us is zinc. So today, out of India, we produce about 1 million tons of zinc metal, 700 tons of silver. Similarly, in South Africa today, we produce almost 300,000 tons of metal in concentrate in the Northern Cape today, and we have plans of taking that to 500,000 tons of metal in concentrate by the second half of next year. So that's how not only what we are doing across Vedanta, predominantly out of India, comes together, but in South Africa specifically. And you know, Martin, when I last spoke to you, when we first bought the assets from Anglo American way back in 2011, we were only producing 75,000 tons of zinc in concentrate from Black Mountain Mine. So to look at that, to now 300,000 tons to 500,000 tons by the middle of next year. That is how it all fits together.
What opportunities do you see for South Africa to become a bigger player in supplying green economy metals such as zinc, but also copper and rare earths?
Yeah. From a South Africa opportunity point of view, it always starts at the beginning, right? Exploration. You know, Martin, if we look at our exploration spend in the country, in the last decade, we've invested over R1 billion in exploration alone. And if I look at the R&R that we had when we bought the assets from Anglo American, today they are tenfold. So it starts with proofing up the R&R that we know, but it's also in going after some of the green fields. I was just sitting with the exploration head looking at the portfolio of the materials we have. The Northern Cape continues to be a very endowed, a resource endowed geography, and we want to go after some of those other critical minerals, materials needed for transition energy in the Northern Cape too. But we have enough with us. If I look at what I just said, 10 times the R&R that we bought in 2011, we now want to take what is the phase 2 project, 500,000 tons, to build that out to at least 1 million tons of metal in concentrate. Of course, it's going to need a lot more thinking in terms of downstream, etc. But that's the promise we are making to the country in terms of what more we can specifically do on green energy and in terms of the materials and metals that are needed. But over and above that, I want to continue exploring, not only in the Northern Cape, but across South Africa as well.
And then getting to ESG and community impact.
Yes.
You talk of transforming for good. Can you share tangible examples from South Africa in the line of skills, health, education that are making the biggest difference on the ground?
Yeah, absolutely. So Martin, as a company, the framework that we look at for transforming for good is around the work that we do for our communities, our people, our planet, which includes our environment. So we look at decarbonization as a start, right? Because we started talking about greening. You can't talk about green without talking about the action towards climate change. So as a company, we've taken a target on reducing all of our emissions by 30% by 2030, which is what all the businesses across Vedanta are doing. As a group today, we've actually just mitigated last year alone about 28 million tons of CO2 because we are in very energy intensive sectors like aluminium, zinc, etc. And if I equate that, that's about the CO2 that a billion trees actually absorbs every year. Now in South Africa, because we're only in the processing of mining as well as concentrating, the Northern Cape operations use about 110 megawatts of power. We've just signed a wheeling agreement for 40 megawatts of renewable. So that's a significant portion, and although it's not around the clock just yet because it's solar, but that will still help us at least diversify our what is today power from the grid, largely coal-based power, to at least 25% of renewables by next year. So that's what we're doing specifically here. Now that's decarbonization, but you asked a broader question around our communities, our planet, etc. And Martin, since having these assets from 2011, we've invested some 200 million rands on community initiatives. And it's so heartening to see the impact that we have, be it in the healthcare, be it in skills development, but also if I look at just on the HRD side, right? Because the Northern Cape, what I love about the story that we've had over the last decade is we've had to protect our succulents, take them off the mountain and bring people into the area. A lot of this has also gone into HRD skills. So I think the team has spent almost 200 million rands in HRD skills in the last decade alone. So the activities have been around healthcare, have been around skills development. Look at just in the last 2 years, we've invested some 20 million rands in a skills development center in Pofadder. I think for everyone that thinks that, wow, where is that? That's only 60 kilometers away from Gamsberg today. And in a short space of time, I think we've upskilled some 840 students. So that's the focus, is making sure that it goes back into the communities around which we operate in. And of course, Martin, the more you make, the more you have to do, the more you have to give. So the team has a target of 400 million rands on similar type of projects for the next 5 years. So we're doubling that. We're doubling what we did in the last 10 years in the next 5.
And then just getting back to that net zero progress, how is Vedanta progressing, you mentioned 2030, but towards its net zero 2050 target, and what specific decarbonisation steps are happening in your local operations?
So yes, we have committed as a company to a net zero by 2050. I mean, if you look at countries like India, they've taken a 2060 target. So we still feel that we want to do this as soon as possible, but definitely better than the targets in the countries in which we operate. So overall, as a Vedanta, today we consume some 5,000 megawatts of power. So the primary focus for us is actually in diversifying that into renewables. So we've signed some 1.5 gigawatts of renewable power to diversify into our overall energy mix. That is actually, Martin, RERTC, so that's round the clock power. What's exciting about around the clock, it's wind, it's solar, but it's actually battery storage to make sure that you get the full coverage across night and day. This is actually a Vedanta company, by the way, that we've set up to do exactly that. So in South Africa, as I said, we've got the 40 megawatts, which is quite a substantial portion of the 110 megawatts of power that we use today as part of that 2050. So predominantly, because of the nature of the industries that we are in, it's all about energy switching. So if we can diversify our current coal-based energy into renewables, that's the target that we've taken. In addition to that, most of our mines across India are now using battery vehicles underground. Our SK mine in Hindustan Zinc is almost all digital and going into battery vehicles as well. So that's the electrification arm that we have. I know that the team in South Africa is starting to look at something like this for some of the underground mine development that we are doing. And of course, the last pillar of decarbonization is to look at waste heat utilization, etc. And because we are so large in smelting, Globally, that's the third pillar, and looking at what percentage of our waste heat we can actually recover from all of our smelting operations. So that's how we look at decarbonisation today.
And mining often faces social license challenges. How are you building trust with nearby communities and traditional leaders?
So, Martin, this is something that I've, practically dealt with since being CEO here almost 10 years ago. It's all about dialogue and conversation. I think you can say what you want, you can have the best grievance systems in the world, which we do have, because I think it's equally important that we have grievance mechanisms outside our mine gates as they are inside. But a lot of this is around a structured dialogue and conversations that the team has actually structured now across the businesses. I know we have something called an Imbizo here that the team does every quarter with all of our stakeholders. So, Martin, the key to social license to operate is not only doing what we believe is right, is making sure that we take our stakeholders along through trust building. And a lot of what we've done since being in the Northern Cape for now more than 15 years is make sure that we set up formal structures to build trust. Martin, trust doesn't only get built through conversations, trust gets built through action. And that is why when I talk about what we've done since taking the assets over, it's so important that the community sees that we are the company that does what we say we would do. So to be here when we are now looking at staring down 500,000 tons, it's quite important for our communities to see. But as I mentioned about some of the initiatives, we're not only supporting skills development for the mining activities that we do, we're making sure that we are supporting skills development for alternative industries that both support mining as well as support the other or the rest of the local economies that we have. So social license to operate to me is all about trust building, and trust building is all about making sure that there's a structured way of dialogue in the host communities that we operate in, and incredibly important that we have a say-do ratio when we talk to our communities about what we have done. And Martin, that's communities, right? But it's equally important that we maintain these kinds of open and transparent relations with our regulator, as well as with other third parties like NGOs, etc. So as a company, we make stakeholder engagement very much part of the way we work. And that is why coming to South Africa now after a long time, and I've missed it, it's been great to catch up with some of our key stakeholders here too.
And investment and growth. On this topic, you've signaled $20 billion in planned investments group-wide. What share of that could flow into South Africa, and what timelines are being looked at?
So Martin, have you ever had the pleasure of talking to our CEO, our chairman and our founder, Mr. Anil Agarwal?
I have.
Yes. So he's a very impatient person.
Well, he was very patient with us.
And the reason I'm saying that is, we've built this company, almost now 17 different businesses in a very short space of 25 years, which is quite extraordinary. And our chairman would tell you that if you want to talk about the Vedanta DNA, it's all about growth. And it's all about doing what others don't want to do, because it's about doing things differently. And that's the DNA I'd love to think that we've imbibed in South Africa over the last decade or so. So when you asked us all those years ago, would you see the growth that you've seen today? Probably no one would have believed us, but we did it. Because we did it on an asset that no one wanted to touch for almost 50 years. So why I'm saying that, Martin, this is also a person that has not stopped his dream. And his dream, as he would tell you, is to actually not to do anything for 1x, 2x, but he's dreaming 5x. So that's why the $20 billion worth of capital. So just to put it into some context for us, so Zinc India today produces 1 million tons of zinc metal. They've already approved, as part of the 20 billion, to go to 2 million tons of zinc in the next 3 years, which is an extraordinary timeline. Similarly, our aluminium business, today we produce 2.5 million tons of hot metal. We are looking to further beneficiate that. That will go to 3 million tons in the next 2 years. Part of the 20 billion is to take that to another 3 million tons of hot metal, which is an extraordinary growth. Our cane oil and gas business today, we produce just under 100,000 barrels of oil per day. We have a target to take that to 500,000 barrels of oil per day. So that's how you look at the growth. Now for South Africa, I mentioned that we're already at 500,000 tons of metal in concentrate. The dream, the action as part of $20 billion is to take that to 1 million tons. And Martin, you would remember that these are the targets I spoke about when I was CEO many years ago on how we could get to 1 million tons of growth here. So to put the investments into some sort of context, right? I'll put it into rands for our South African audiences. As a company so far, we've invested about 21 billion rands in capital. So not total, in capital only, to build the phase 1 and phase 2 projects. And way back then when we, in 2018, as part of Invest SA, gave the commitment on what we would do, that was about 18 billion rands then. On the to-go basis, between FY26 to FY30, that will be another almost 17 billion rands worth of investments to increase capacity to the 1 million tons of MIC. And all of that, Martin, will come from Gamsberg phase 3. So phase 1 and 2, 2 large open pits, in fact multiple open pits. Phase 3 will be an underground mine, which was always the plan for Gamsberg, because the grades are actually more attractive on the underground basis. So $20 billion is to take today's Vedanta into tomorrow's Vedanta, as the team and I call Vedanta 2.0. It's the next generation of growth projects in the particular segments that I've just mentioned, but every company will grow. And then South Africa is absolutely part of that overall mix in terms of its share of going from 500,000 tons to 1 million.
Great to have capital investment in South Africa.
But would capital come so much more, right? And we've always in mining spoken about the multiplier effect. And Martin, I am so humbled to be leading a company that's having the kind of impact that we are in the Northern Cape, a region especially in that part of the Northern Cape, in the whole Pofadder, Akanes, Kamos area, that so deserves it, so needs it right now.
A balance is always needed, and you know, your 5-year shareholder return has been exceptional, but how do you balance rewarding investors with reinvesting in expansion like this and technology?
That's something that is, as CEO, is my constant job in terms of making sure that the priorities are clear. So the priorities for me are very clear. We've already invested a significant amount of capital within the businesses. If you look at Vedanta from 3 years ago, we said we would invest about $9.5 billion. As of March this year, we had invested and spent almost $5.5 billion of that, most of that in aluminium projects, as I mentioned. So my first priority is making sure safely that our businesses deliver on the growth that they've already spent the capital on. And that generates a cash flow. And it's so good now to be on the tail end of that growth projects, because that's where the increased volume and hence cash comes from. So that's my first source of revenue for the company. But as you mentioned, right, and as I discussed, we are a growth company. So my job is to also make sure that the kitty, after all of this, is enough to do those two parallel activities. We love rewarding our shareholders because that's why we're in business, outside of rewarding our stakeholders, and making sure that we can still use now producing businesses, which is the differentiator, right? Because once a business produces cash, that cash can not only be reinvested in the business, but also be reinvested in the capital. And that's the balance that I constantly talk to the team about, is how we get right. But Martin, you mentioned technology. And yeah, I think I've now been in the industry almost 28 years, which is quite extraordinary. And it's time to do things differently. So we are taking a few bets in terms of how to actually start to constrict our footprint, which I know every miner is looking at. And that's some of the R&D work that we're doing. In addition, we are doing a lot of work on circularity. And you've heard, I think, a lot of other countries talk about primary and secondary. And secondary not only from recycling, but secondary from reprocessing. So even on businesses like Hindustan Zinc, our Rampura Gucha tailings, we've just approved a project to process 10 million tons of tailings a year. It will become the single largest tailings reprocessing. We are looking at opportunities like that in South Africa as well. So the capital discipline is very clear for us. We only invest in high-teen projects in terms of rate of returns. The job for me right now is to make sure the capital that we've spent works for us. But in addition to that, what's left, my job is to make sure it can support, through balance sheets of the individual companies, what we have to reinvest in growth, as well as how we reward our shareholders for supporting us. Over and above that, we've got to become more efficient from a capital intensity point of view. And outside of backing technologies that are going to help us to reduce the footprint that we actually use today to mine, to produce, we're also looking at how we can become more active in reprocessing waste streams.
And still on the subject of technology and innovation, where is automation or digital mining already changing the way you operate at Gamsberg or Black Mountain?
So the team is actually doing a lot here. The team has installed technology across both open pit fleet as well as the underground fleet. And Martin, it's all about, again, safety, right? So not only do we use the technology for efficiencies and productivity, but we're also using it for safety. Secondly, a lot of controls today are done digitally. I mean, even if I look at things like exploration, the way we do our core scanning, the way we do core logging is all done on digital. So yes, we're embracing. What I'm looking for now is perhaps the pivot, the next thing. So it's outside of it, digital twins, which Gamsberg, we do have a digital twin. It's outside of that. So now looking at how we can actually start to design some of our processes using digital and AI. And I think everyone is scratching at this, right? And I'm now thinking, I'm tired of, I'm sure like you, Martin, we use AI almost every 5 minutes, asking it a lot of interesting questions. But now I'm saying, how do we design workflow to embed AI in processes that it can actually do? And how then do we change the nature of work around that? So a few years ago, we were talking about changing the nature of work around digital. And I'm saying, let's look at changing workflow to incorporate digital and AI. So that's the work we're doing at Vedanta, and there are mines that we have in India that are completely digitally enabled today. So we have not only the operators on surface operating equipment underground, but we also have digital twins for mining operations in India as well.
And glass substrate. Vedanta is among the world's few glass substrate manufacturers. Could we see more high-tech downstream processing in South Africa?
Absolutely. So for now, I've got to use what we're blessed with. We stop at MIC, but should solutions, more viable ones for energy as well as for infrastructure become available, we can definitely bring the technology solutions we have, not only innovation like glass substrate, but also I said we in digital integration across India. We're building data centers in India too. And one of the initiatives that the team is looking at is how do we use the SEZ next to Gamsberg, which is always the plan for additional beneficiation, but how can we attract other businesses to an SEZ setup near Gamsberg, especially given the scale that we would have to do this. I think, Martin, that's the opportunity, but watch the space. That's a coming attraction.
Regarding workforce and inclusion, women working underground and in aluminium potline teams is an industry first. How are you breaking barriers for women in mining in South Africa?
So Martin, when we started Gamsberg, you wouldn't believe it, but we were 40% women already. Isn't that amazing? And most of them were local women from the region, okay? Because that's the opportunity when you start something. Because everything else is retrofitting, right? But when you design it, well, firstly, when you have the dream, you follow it with the design, you can then make it happen. So that's how Gamsberg started. Today, as an overall Vedanta organization, we employ some 120,000 people, directly and indirectly, of which 22% of them are women, which is quite extraordinary, especially in the examples that you mentioned. It only became legal for women to go underground in mining operations in India just a mere 5 years ago. And for us to now have sections in underground mines like in Hindustan Zinc of women only is amazing. It's a testament to the progress that not only we drove because we were part of the advocates getting women to work underground is incredible. But when I go into some of these aluminium production sites and you see pot lines, which is the first pot line where we have Sindhu and a team working, it's amazing to see young women. So Martin, the other thing that India has, and I think we have it in Africa as well, is something we call the demographic dividend. So in India, I think some of the average workforces are in their early to late 30s, which is extraordinary. And having just spent my time in Canada over the last 5 years, we had the opposite challenge, right, of the age cliff in terms of now finding new skills. But similarly in the Northern Cape, one of the, I would say, challenge and opportunities is youth unemployment. And a lot of our skills development program is specifically targeted here. So if I look at then, how we can not only bring women, but bring youth into our businesses, it's extraordinary. So we employ 5,000 people in South Africa today, and I think we have some 30% of women across the company, which again is extraordinary. And as a female CEO, and I don't like to call it out, but trust me, it's not something that I do from an initiative point of view. I just wire the company to bring as many women across any opportunity as we can. And Martin, I have to recognize our chairman's efforts here. Every day, in any team meeting, in any structured discussion we have with him, his first question is, can we bring more women into this team? So it starts at the top. I think we've got good traction on the ground, but we are, I think, one of the few companies that are actively talking about how to bring more women from grassroots level into not only operations, but how then do we progress them through the ranks in a far more accelerated way.
And then prioritizing skills. What skills are you prioritizing to ensure that local employees are ready for a more automated, low-carbon mine of the future?
Absolutely. So skills being prioritized is both for today as well as tomorrow, right? So I just mentioned the Skills Development Center, where we are looking at the needs of today, right, in terms of some of those artisanal skills. So that will happen. I think that will start shifting in terms of how much more automated those skills become. But in addition to that, when we built Gamsberg Phase 1, we actually rolled out the Wi-Fi that we had in the pit. We rolled out Wi-Fi to all the surrounding communities, which is a great initiative. I remember then the team calling it digital empowerment. So skills of the future, as we just mentioned, right, on digital AI, etc., is going to come from our young people becoming far more equipped with using digital and AI. And that's the work that we're doing on some of the education initiatives that we have across the Northern Cape today.
When it comes to strategy and outlook, you've announced a Power of 5 demerger to create 4 pure play businesses. How will that unlock value for African operations?
So maybe I'll just explain very quickly what that is, right? The Power of 5. So I think, as I mentioned earlier, our chairman has done something in maybe his lifetime that others would take a few lifetimes to do. And in the short 25 years, we've got some 17 different companies. Now, as much as these companies make a lot of sense to us because they were bought either opportunistically, they were grown because the chairman saw the need in the market, etc., these 17 companies don't naturally make sense together. So the part of the demerger is to create kind of logical pure play verticals for us. So that will be aluminium, it will be the oil and gas vertical, it will be Vedanta Limited, because that's where Hindustan Zinc and Zinc International sits in. It will be power, and it will be steel and iron ore. So those are the verticals that we will be creating. Now, when you create verticals, you do 2 things. Firstly, you do multiple things, but you give certain investors the opportunity to invest in certain businesses that they really see the potential for. So it could be aluminium, it could be zinc, etc. But secondly, Martin, you give each of these businesses their own balance sheets. And with the balance sheet and the responsibility that goes with it, they now have the power to grow these businesses. So similarly, Vedanta Zinc International would then be part of that Vedanta Limited, but without the rest of the businesses, and the power to then make the money and grow the businesses per its own individual balance sheet. So that's the opportunity of the Power of 5, and the power that each businesses get as empowered CEOs with their own balance sheets, of course, with an agreement of some of the rules with myself, the chairman, etc., on how they want to grow these respective businesses. And we're excited. I mean, we've said in the market that we believe that there's at least $100 billion worth of value in these various verticals to unlock. Martin, is not that impossible, right? If I look at last year's EBITDA, $5.5 billion, we've guided the market this year between $6 to $7 billion. If I mention some of the growth projects that are already in train, that will start to come on stream from next year, the minute we become closer to a $9 to $10 billion company, EBITDA-wise, an EBITDA multiple of 10, in some of these companies, I think it'll be a little bit more than that, $100 billion doesn't become such an impossible valuation.
And finally, looking 5 years ahead, what does success for Vedanta in Southern Africa look like to you?
Yeah. So Martin, it's the dream, right? It's the 1 million tons. I think if the 1 million ton production, safe production is behind us, fantastic. If we have more women in the company, I think, I dare to say more than 50% success. If we've started to change the nature of the work that we do, because it is a very remote area, as much as I want to support socioeconomic development, but we need to think differently in terms of how we can automate some of this work. So I do want to go big on changing the way we do the work, especially at these increased volumes. And Martin, to move all of this, volume, we need to make sure that we're doing it in partnerships. But true success is not only going to be about what we've delivered, both in terms of volume and profit, it's going to be about the impact that we have on the ground. I mentioned earlier the projects that the team is doing, be it in healthcare, be it in education, skills upliftment. I will be most excited when I see the multiplier impact on the ground in the Northern Cape in 5 years.
That was Creamer Media's Mining Weekly, speaking to Deshnee Naidoo, the CEO of Vedanta Resources.